Up next, Forum Daily's weekly market update with Catherine Murray, host of The Buck Stops Here. All yours, Catherine.
Thank you, Nima. Hello, everyone, and welcome to your weekly market recap. I am Catherine Murray. Well, we started the day off with the markets sharply lower, Europe down by about 4 to 5%, Asia down by 2%, and the North American markets look to be opening down by about 3% as well. All of this, of course, on the back of Russia invading Ukraine. When we take a look at the North American markets a little bit more in depth, the Dow was to open down by about 800 points. The NASDAQ was moving lower to the point where it was going to be in correction territory or bear market territory, meaning down 20% from its recent high. Having said that, we are seeing the markets recoup some of those initial losses. One of the hardest hit areas within the market has been hotels as well as cruise lines and airlines. On the flip side, though, energy, WTI, did hit $100. We are seeing a spike in the price of crude oil on the back of supply constraint concerns stemming from Russia. Keep in mind that Russia supplies about 40% of Europe's nat gas supply and needs. Also, of course, key and critical to the conversation is what will the sanctions look like? Will they impede growth? Will the sanctions also include the inability for Germany to receive nat gas and oil from Russia? And they account for 40 to 50%. Russia accounts for 40 to 50% of Germany's nat gas and oil needs. So a lot of question marks, hence the uncertainty in the markets, and more so in those European markets than the North American markets. There is, of course, a view that there will be less of an impact on North America, given what's going on in Ukraine and Russia because of fewer trade links. But having said that, we do have to take a look at the global growth picture. U.S. 10-year yield did decline to about 1.8%. Remember, it hit just over 2% the other day, likely in part because you are seeing investors buy bonds, so pushing up the price of bonds, putting downward pressure on that U.S. 10-year yield as a flight to quality. The question will be, of course, whether or not the U.S. Federal Reserve, which is set to meet next week, and also the Bank of Canada, will continue on the rate hike path, given the uncertainty and the negative impact that that could have on the global growth outlook. Interestingly, on that point, an ECB member said that the bank, the European Central Bank, should continue their quantitative easing and be open to stimulus in order to provide a cushion in case there is this continued conflict, obviously surrounding Ukraine and Russia. We also, of course, heard from the BOJ governor, Bank of Japan, reiterating no immediate plans to dial back massive stimulus. So it'll be very interesting to see what the U.S. Federal Reserve does next week. Remember, in the marketplace, it was almost pricing in a 50 basis point increase. Maybe it'll be 25 basis points. Will the Bank of Canada raise rates as expected? Maybe ever so slightly. Lot to watch for next week. In terms of other items within the marketplace, as I mentioned, WTI is spiking today, oil that is. The Canadian dollar, though, not following the price of WTI. It seems though investors are buying that US dollar, again, as a safe haven play. Away from that, on the Canadian stock front, the big banks in Canada are reporting this week. We did hear from Royal Bank. They did post a nice first quarter beat, helped by strength in their wealth management business, but the stock is trading lower, likely a little bit more a reflection of the overall market. Loblaws did report a better than expected fourth quarter earnings. That stock is up by about 3-4% right now. Moderna in the United States on the biotech front, they also had a nice earnings result. Revenue beat expectations. That stock's up by about 11%. And Alibaba, their revenue missed expectations. That stock traded down by about 11%. Just wrapping up here, I'll leave you with this. UBS has surveyed 16 major political events since about the 1960s and found that the median market drawdown was 4% over the following 6 months. Let's see what we have in store. Watch the central banks next week pretty closely. That'll give us a bit of an indication because the tightening cycle is one of the biggest headwinds aside from the Russian invasion in Ukraine that investors are having to grapple with.